Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, January 17th. Michael Boutros here with you this morning. Kanwal, Pooja, Sharif, Theo, Ziad, Eileen, great to see you all in the room. So, start of a new week on the back of the holiday weekend. So we are a little bit light on volume where we were yesterday. We're just coming back online today. I do want to note we just got the release of some U.S. data. Here's what the docket looked like. Empire Manufacturing coming in at 6.5, slightly weaker than the anticipated 8.5 print, and comes off of a previously downward revised 7.6 from 9.0. So a little bit weaker on Empire Manufacturing. Do keep in mind you have some commentary on the board today from Fed officials. Dudley at 8:45 and at 1800 later this afternoon, you'll have Williams speaking in Sacramento. So I want to leave as much time for questions as possible. I have on my list the DXY, obviously making a move in overnight trade. We'll talk about that. You can see that on your screen right now. Coming off of that 100% extension at 100.43. Some comments by President-elect Trump with regards to strength in the dollar, giving a little bit of a kick here to the greenback. I want to review Euro Pound, gapping into resistance at the weekly open. And obviously we want to go over Aussie Yen as well. We will go over all the dollar crosses. So if you have any questions on those, feel free to throw them on the message board, but I'm going to cover all of them. Pooja, are you in the room? Pooja, by the way, I got your email with regards to Trading Station. I'm not sure that's the case. They're being hosted by Oanda. I don't think, at least we haven't been alerted to any problems on our end. It might be a country-by-country region type deal, but as far as the scans that we do and all the trading station stuff that we do here, Pooja should be unaffected. So just a quick note there. Hey, Pooja, I see you. Juan says Aussie Key, Euro Oz, and maybe Euro Swiss. Let me write those down. Aussie Key, definitely Aussie Key I'll talk about. I definitely want to look at that. Euro Oz for sure. Euro Swiss, you know, I'll take a look at it. Juan, I don't trade Euro Swiss. I have no interest in trading Euro Swiss, but we'll take a look at it. Aussie Yen, Juan says the top of my list too. That's on today's docket for sure. Theo says good level to add Aussie dollar long or hit its limit. So we'll take a look at Aussie as well. That's in the dollar crosses. Let me just take a quick look at Aussie right now. I just want to make sure I'm not missing anything. No, I wouldn't be chasing along from here. Not yet, personally. Okay. All right, here's what the dollar index looks like to start off the session, and here's what relative performance on the greenback looks like to start the U.S. or ahead of the U.S. Open. You can see the dollar is actually weaker against all its major counterparts. Again, we did get some commentary from President-elect Trump. It was really geared towards yuan strengthening. Yeah, Pooja, a slip on my end. Trade station, not trading station. I'm with you. There is no links to FX anymore, not even for the data. They're going offline from 4th of March 2017. All right, let's look. Let me and Jamie look into that, Pooja. Again, on our end, we haven't seen anything, been alerted, but we will keep you updated, okay? And I got your questions on nat gas and copper combo for sure. It's on the list. Okay. So relative performance versus the greenback. Obviously, Theresa May, everyone's on tap for those comments with the EU and the Brexit and all this. You're seeing that the sterling is up a whopping 2.31% with a big old outside day reversal. And still looks pretty good. Finally getting that pop higher. So we'll take a look at the sterling. Kiwi up 1.1%. Aussie up 0.8%. I'm not going to lie to you. I was holding a short in Aussie since last week. I held it all through the weekend, held it all through Monday, didn't see any issues with it, continued to hold below, resistance until we got this pop here in the dollar. So I'm out of that at this point. And I do think Aussie does risk a little bit more of a stretch higher, but we'll go over those levels. Aussie Key we got, Euro Oz we got. As far as the economic docket, do keep in mind the BOC is on tap tomorrow, Bank of Canada. Thursday opens up the European Central Bank interest rate decision. And as far as the U.S. is concerned, we do have CPI numbers on tap tomorrow. Obviously, those are big, big numbers for the Fed. Not as important as the core PCE, personal consumption expenditure, which is a little bit more of an in-depth gauge of inflation, but certainly consumer price index will be should be a market mover tomorrow at 8:30. All right, let's jump right in. Here we go. So the dollar index looks like to open up the session. So here's what we look like on the daily chart. And I'll show you the intraday chart in just a moment. If you go back to the previous dollar reports, and we'll go back even further here, back to the 10th. Here's what the dollar index looked like when we were just starting to scope out this near-term median line formation. Now, there's a parallel here that if you drop it off the lows, continues to hold. We'll look at that in a moment. But the basic premise of it is you're coming off of an exact 100% extension. So now 2 equal legs down gives you precisely 100.43. The low in overnight trade was 100.45. You're seeing a little bit of a bounce here. I do think you could get a rebound in the greenback, but the broader focus still remains lower while below 101.80. Okay, just above the weekly opening range high, and that's where the median line comes in. So where last week we opened up the week with a bearish invalidation level of 103.21, we're going to go ahead and drop that level down now to that 101.80, 101.90 region of the median line in confluence with that longer dated 618 retracement. And this is a long dated retracement of the decline into that 2008 low. Okay, big region. On the near term, keep in mind also that momentum is not going to endure at 40 here, something I'm looking at for a possible support bounce here in momentum. The intraday chart is really where things get interesting. Okay, let me bring it into a 2-hour. Here's what the 2-hour chart looks like now. Here's what it looked like last night. Oh, this was how it looked back on the 10th. Same median line formation. Here's what it looked like last night. Okay, so the risk, as we had noted, we had dropped our bearish invalidation level down to 101.91. There's 101.91 alongside the median line. Downside targets, you had 101.11, which we hit last week. We had 100.79, which also, or 73 rather, which also hit last week. There's that turn just ahead of support confluence. Keep in mind this is also a basic 786 retracement from the advance off the lows you made on the 8th of December and that 100% extension. So the focus heading into U.S. trade is this region right here. Okay, this is the focus range heading to U.S. trade. Either a breakback above those lower parallels, okay, let's call it 100.87, 100.90, or a break below 100.37. And if we get below this 37.43 region, sayonara. I think you risk some serious declines for the greenback. Such a scenario, your first initial target is at 100. 99.53 would be the January high day close. And then you're looking at just a median line here that we were working with on the way up. So make or break, I think. You're coming into a big support region here for the greenback. Early in the week, watch 100.43 into 100.90 as your initial key range for the dollar heading into the U.S. Open. Hi, Mike. Sorry I'm a bit late. May did not really say anything. I'm not sure what you mean with the, I think you got a typo there. I hate to think how far the sterling will move if someone leaks a surprise in the negotiations to come. Gotcha. So we've been expecting comments from her, right, the entire time. Yeah, I don't really want to stress my trade setup based on waiting for her comments, Graham. We'll take a look at the sterling in a moment. I think it's a very interesting scenario, and I actually I want to be the guy who keeps liking the long side, but I still do. And even though we've been getting slammed lower, the rebounds in sterling have been coming off of levels of interest. We'll take a look at that in a moment. Theo says, can you talk about Trump inauguration vulnerability to the U.S. dollar? So if we have time, I will go over that. That's more of a theological type of thing, Theo. You know, we could go over that for a while. And again, I don't really want to put that into my trading. I don't want to filter that into my thought process on a day-to-day basis. At the end of the day, the inauguration is seen, or Trump's presidency is seen as a positive for U.S. markets. A positive for U.S. markets is also seen as a expedited sort of thing that's going to weigh on the Fed to begin normalization, which means higher rates, which in turn would mean a decently stronger dollar. Now, the comments that you saw in overnight trade, like I said, I think are a little bit more attributed to a shot at China with his claims that they're devaluing the currency, which is making the dollar strong and making it a little bit more, giving us a competitive disadvantage versus trade with China. I don't necessarily think it's a blanket dollar strength statement. Certainly it would be a new thing now if, presidents are actually remarking on the strength of the dollar coming into unprecedented times for sure. But Theo, I wouldn't stress that too much. And if let me take a step back. Irrespective of Trump, the Fed's on the normalization cycle. Further hikes in interest rates are expected. Markets are beginning to price in normalization and higher rates from the fundamental story that's broadly supportive of the dollar. That doesn't mean we can't pull back in the near term. That doesn't mean this thing can't correct on a larger scale. Theo, does that help? I'm just being honest with you. I don't really filter that stuff too much into my trading. I want to know when the releases are happening. I want to know if comments are coming out. But certainly for me to try to trade, the Trump inauguration is, in my mind, just, not the right direction I want to go. He says, yup. All right, cool. Okay, so risk for a rebound off 100 spot 43, spot 37. Key resistance right here into that 90 region. Let's see what happens. Broader bearish invalidation still up at 101.80. 101.90, this region here. So even if we do get a rebound, we'd be looking for resistance here. A break to the downside keeps the short bias in play. Okay, that's the dollar index, number one. So number two from yesterday was Euro Pound. And I just wanted to highlight this because this is a trade that we've been following for some time. I hadn't given you a daily update in a while, and I wanted to give you the daily chart because we gapped into a very, very critical region. If you guys remember this trade, a couple of weeks ago we talked about it, and we were talking about this region first, 87.23 into 87.39. Big region of resistance from a Fibonacci standpoint. You had the 100% extension of the advance off the lows from last year. You had the 50% retracement from the decline off the highs we made on that second swing in October. And you had the median line, okay, which was just higher. That's what ended up catching this thing, okay? We were looking for a resistance or short entries from both of these levels, both areas of interest for exhaustion / short entries. Well, we held that resistance into the close of the week. We gapped higher into it, and just to fill the gap would have required a move back into former resistance, now support. We're now making a move beyond that. I think we're getting the validation that we've been looking for this correction in the Euro Pound, finally. Note that momentum also looks like it wants to make a break back below 70 on today's close. That would be a bearish development in and of itself. Also note that there is a support trigger. I want to see today a close beyond this. Whoops. Low in price. Okay, and we want to see validation there for that move as well. Really, the tell here for the Euro Pound is on the intraday chart. Here's what it looks like. Okay, and here's what we looked like last night. Okay, here's the 4-hour chart. We noted that this key region of resistance, 88.15 to 88.22, was sort of the focal point to start off the week. We gapped above it, okay? The pullback came into initial support and saw a rebound, but we still cited a downside bias while below the weekly open. That upper parallel needs to break down below 87.64 to get this thing going. So we already gotten those downside initial targets taken out. And you're testing near-term support right now, 86.52. Here's what the intraday chart looked like on the hourly. Okay, there's that support that we took out. Downside levels first was that median line, 86.53 into 86.60, being tested as support right now. So you could get a rebound here. Now you want to drop your bearish invalidation level from up here down to that level we just broke at 87.64. Scratch that. And a continued favor of downside bias here on rebounds in Euro Pound. Certainly well supported by what we're seeing in sterling strength. So a pair that, finally starting to make headway here off of a resistance level. Any questions on Euro Pound? So Mike, where would I look for re-entry on Euro Pound? It's probably what you're thinking at home. So here's what I would say. If you're not already short here, first of all, if you are already short, this is where I'd start to take a little off the table. If you have an entry above 87.63, I would have it just above that region. If you don't, I'd have my stop right above last Friday's close. Okay, so right about here is where I'd want to see initial resistance. And again, bearish invalidation still at 86.40. Excuse me, 87.64. So as long as we stay below that region, I'm going to want to continue to favor shorting Euro Pound. Inevitable break, you look for that 50 line. I don't want to stress it too much, but we have gotten some play off it. That takes you down to like 86.25. And then the 50% retrace of the basic range, also a very decent pivot in price here if you look to the left, comes in just below 86. So it looks like we caught a nice turn here in Euro Pound. No change to any of those levels from last night. Eileen says, when you get a chance, what's your take about trading FX options versus pairs over major news unknowns like the May or Trump, for example? So Eileen, I can just just to be quite frank with you, I don't personally trade options on a normal basis. It's been years since I have. It's a great I think it's a great option for trading those types of event risk, absolutely, because you have a very, obviously your downside is well defined. And options allow you to take advantage of a lot of other positions in the markets. For me, I thrive on the volatility. I'm much more a near-term trader, so I don't have too much experience to share with you about trying to use the options for more of an event risk type of geared play. So, yeah, me neither. I mean, no, but not recently. It's been years. We traded options pretty heavy on the desk at Money Garden. MG Forex, but not here. Okay, any questions on Euro Pound? Loving it, no change, looking lower, finally getting that turn. Keep in mind you have the 100-day moving average coming in just above the median line, so 86.30. Remember that median line comes in at like 86.25 or so, so watch this region here if we do break lower, but I'm going to continue to favor the downside here below 87.20, 87.19 in the near term. That was number 2. Where are you looking for rebounds in Euro Pound? So right here would be the first area, Eileen. I would expect possibly to see a near-term rebound. You're looking at a basic 38.2 retracement, okay, of the advance off the lows from back in December and the swing high that you made back here on December 29th, which was the December high. So I think if you're going to see a rebound, this is sort of an initial area I would look for it. Otherwise, it would be the 50 line, which is, again, that 86.25, 86.30 region. Those are both areas I'd look for initial rebounds. Entries on the short side, like I said, first area would be 87.18. I don't want it to get into 87.60, but if we do get up there, I think you might get another opportunity. Ideally, this thing holds sub 80, holds below Friday's close. That's going to be certainly a continued bearish development. 87.18. Yeah, if it gets up there, Eileen, I'll be looking for short triggers for sure. Yep. Back into this same region. I mean, such a critical region, right? In price action, even going back a couple of years. Big pivot zone. And not only that, guys, but, obviously it's way too early to talk about this, but based on how price action develops this week, if you bring this into like a weekly chart, you're risking a big old outside weekly reversal if we move below 86, essentially 85, 88 here, which would be a very, very stern bearish development on the back of, where we are in price and trend. Questions on Euro Pound? That is number 2. Number 3 from last night is Aussie Yen. Pooja, this one's for you. I've been all over this trade. I shot a piece actually for IG on this. IG obviously does a lot more broadcasts and marketing, interviews, and all that good stuff, more so than FXCM did. So you're going to see a little bit more of me and Jamie on that. But they were asking to do an interview on Aussie Yen, which was my piece for the year. And these are the levels. I'm going to bring you to the weekly chart that we've been talking about here on SB for months. 87.55 into 87.64 was such a critical region. You had the 2016 Open, the 50% retracement of the decline off that 2014 high. You had the median line off the lows. I mean, it was loaded up. So entering the start of this year, the risk is to the downside. You're coming off of structural resistance. Momentum is coming off of the 70 region. You look for that setback, ultimately, to buy it. We're working under the assumption, guys, that this is, could be making a pretty big near-term bottoming process here over the last couple of years. Huge region of support that we responded to perfectly last year. And certainly the breakout that we made late last year in November takes out a median line formation that has been in play for nearly 3 years, or over 3 years at this point. So the focus is, guys, you're looking weakness early in the year, ultimately to buy for a extended move higher here in Aussie Yen, with key resistance on the near term still that 87.60, 87.55 area. So the broader picture, pretty clear. Near-term support, the 50 line. Near-term resistance, critical resistance, this region here on the weekly scale. Okay, daily looks like this. Okay, there's that key region. There's the pullback. Just within the confines of the ascent, there's this median line, which has been offering some resistance. Key support at this point, 84.35. Just ahead of that, you have a couple of lows here at 84.50. You have the monthly open just below that, and you have the median line. Okay, so this cushion region, we'll look at it in the intraday chart in just a moment, but this cushion region is absolutely critical support near term for Aussie Yen. Drilling down even deeper, here's what the 120-minute chart looks like. And as I noted yesterday, it's too early to really focus too heavily on this median line formation. Why? Because we haven't gotten too many plays off it just yet. You got 2 touches here on the decline on Friday, but I don't want to touch that, or I don't want to stress that just yet. Long story short, when these median lines start to match up with key regions of support or structural support that we're looking at anyway, it's worth just keeping it on your chart. So Pooja, this is sort of what I'm working with to start off the week. This is the 120-minute chart. I want to generally be bearish sub 86.08. If we take a look at 86.08, it's the 618 retracement of the near-term decline, okay, just off the highs here, but it's also the reversal day close. That comes in 86.07. So a big region of resistance here any way you slice it. Add to that, it could be the upper parallel of this near-term formation. So generally speaking, I'm looking for a little bit more of a setback here in Aussie Yen. Downside targets would be 84.72 and 84.35. Pooja, that's just a 618 retracement of the near-term rebound. Keep in mind over the next couple of hours, an even day and a half or so here, the 50 line of that current near-term slope converges on that. Just lower, you have this region, 84.35 into 84.25. It's the monthly open, so it's also the yearly open, the 764 retracement of the advance off the lows, and the median line structure that we talked about in the daily chart here. So bottom line, looking for rallies to sell while below this upper median line parallel, bearish invalidation 86.08, near-term downside targets 84.72 and 84.30/35. Questions on Aussie Yen? Pooja says, thanks, I got almost the same levels while I worked through the charts this morning. Right on. Love it. Loving it. So we'll see if we can't finally get the pullback here. Keep in mind one thing, guys. You got a gap lower on Sunday, but we've filled that gap. So that gap play, if you're looking for a rebound higher on account or justification looking to fill the Friday gap, that's already done. Finito. Okay? There's the Sunday close. You gap lower on the open. We filled it within the first 2 hours of trade and pulled right off. So the merits of a gap fill bias are no longer viable in my humble opinion. Okay, so just keep that in mind here on Aussie Yen. All right. Number 3, that was Aussie Yen. Let's just stick to the Aussie crosses. Was it Pete? Was that you looking for Aussie dollar? Who was that? Theo. You too. You got it, man. Here's Aussie dollar. So a little bit frustrated with Aussie. I sat in that short. Seemed like it was like forever, but didn't quite get the move lower. This is, the move I was looking for was 74.35, 74.40. This is where my limit was. And here's the top side break. Look, let me take a step back. Here's the daily chart looks like. Okay, I don't have anything at today's high. I do want to say that the 75.40 level consists of the 618 retracement of the entire decline off of the highs that we made in November. So right here of this whole decline. Today's close will be important. If you close below, you could get the pullback. Do I want to necessarily start fading dollar weakness? Well, that might not actually be a bad idea if we close above 100 spot 43 on the index here. So I don't know what to do with the Aussie here. Theo says, I got stopped out like you. Yeah, I mean, I don't blame you, Theo. It's, you can't always see these commentaries coming out. Who the hell knew that Trump was going to all of a sudden start talking about dollar strength on a Tuesday morning or a Monday night after a holiday in the U.S., right? But I guess we should come to expect more of these kinds of developments. So, hey, look, it's going to happen. This is why we use proper risk management. And, if you get stopped out, brush yourself off, move right on. Moving forward from here, I wouldn't do anything as far as trying to get aggressive on a reversal play until we get back below this confluence region that we hit last week. This was one of the reasons we took the short. This is big. Yeah, the 100-day moving average in blue, the 200-day moving average in green, and the 50 line, the current operative slope off the high, all converging right here. Okay, the close high for December and the swing lows for October. I mean, you couldn't load up more stuff here. And the long story short, that's why the premise of this short was on Friday. Actually, I was in that short, I think, even before Friday. Long story short, we broke out. Here we are probing through resistance. I don't want to do anything just yet. I want to kind of see how we open up the U.S. trade session here. Here's what I would be looking at. The only other area I'd be looking to possibly look for another short would be structural resistance. So I want to poke higher into 76. Or if we close below 75.40 on a daily candle close, it might be a near-term exhaustion trade. Note that we did not make a higher high in momentum. And while this is a weak divergence signal, it is there nonetheless, okay? And I don't want to go chasing Aussie dollar on a long at multi-week highs. So I can't get, I can't get excited or I can't advise you guys to start chasing this. That's all I got to say. So we will have to see how this one pans out. Also, that retracement that we were working with, going to go ahead and stretch that here to this high. Again, we don't have any validation of this being a high, but I just want to show you when you do that, a basic 236 takes you right back into that same level. Okay, 74.60, 74.70. So you don't really need to stress this retracement right now. Looking for signs of exhaustion on a poke into 76. Or, again, if we close below this key region of resistance, you're at risk for a pullback or a little bit of a recovery to the downside. Theo, does that help? A close below what level again? 75.42. What we're testing right now, the 618 retracement. Okay. You know what, Theo? I would even stretch that out into this region, into 75.58. The swing lows from here. And the swing lows from here. I'll give you a nice region of resistance. Yeah, I'd say 75.42. If we close below this region on a daily candle close, for me, that would be marking some near-term divergence and would also be suggesting that you have some near-term exhaustion. Okay, remember what panned out like that last week, guys? Dollar yen. You guys remember this? I remember it vividly. It was the 11th, and we were talking about this in the webinar, and we said, hey, look, guys, we're at support. Okay, it's been probing here for the last couple of days. If it closes sub 115.50, sayonara, this thing's probably going to drop. Well, guess what? We closed that day at 115.41, and here's the subsequent drop. So guys, the daily closes are absolutely paramount. I'm not just saying that to stall the trade. There's a reason we look for these daily closes. The market is coming in at consensus at the daily close, the idea behind it, in that the markets have, there's consensus in that this is, where the price is fixed at into the close of a day. A lot of times you see a lot of transactions at those levels, and kind of gives you some key regions to work with. So as far as Aussie dollar is concerned, that's kind of the game plan for me, Theo. Does that make sense? I don't want to fight this rally. Again, on a stretch into structural resistance, this, formation has been pretty clean. But until it does, I wouldn't necessarily be taking on new exposure from these levels. Leo says, thanks. Yeah, all right, cool. You got it, Theo. Moving right along, that was number 4, Aussie dollar. Let's stick with the Aussie key. Who was asking about that? Juan, I think it was you. Yes, please. You got it coming up. Here's Aussie key. Interestingly enough, Aussie key continues to hold major critical resistance. I was looking at this yesterday. I wanted to highlight it, but we had so much chop last week that I didn't want to get too excited on a long Kiwi position yet, which is essentially what you're doing on a short Aussie key. But look, it's panning out beautifully, okay? We talked about 105.47, 105.40 last week at nauseum. That's the 50% retracement of the decline off the highs that we made back in October. You also had the swing lows that we made for the January opening range of last year. And most importantly, that long-term 2014 January median line that we've continued to work with the parallels comes in as resistance. The upper parallel for the current operative structure off those 2015 highs also converges as resistance. So huge region. Heading into the open of the week, you're at risk for a downside move. Again, a move below and a close below this level here, the initial monthly opening range high. I'm going to highlight it for you. And the 100-day moving average, which has been a decent pivot in price. A break and close below this would suggest you're in for a near-term correction lower here in Aussie key. Here's what it looks like on the intraday charts, a little bit more compelling. This is the same levels from last week, no change. And here we are testing near-term support at a basic 38.2 retracement of the advance off the lows. Also converges very nicely here with the median line off the low. This is a 120-minute chart on Aussie key. So at this point, heading into the U.S. session, if we get a rebound from here, Juan, long story short, I want to just highlight the key levels first before we talk trading plan. Bearish invalidation for the near term. Right back up here. 105.40, I'd call it. The upper parallel, the 50 line for the current operative slope. That would necessitate a breakback above the weekly open and Friday's close. And obviously that red line represents that 2014 slope. So it all converges just below 105.40. Maybe fourth wave currently. 1, 2, 3, 4 possible for one last probe higher. But from where we are on a structural basis, I kind of hope that's not the case because I do not want to see this probe again through the resistance. Here's sort of an initial indication. See if the 100% extension is catching any support here. Okay, so the 100's right there too. Scratch that. So the 100% extension's right here too. If you're looking for a rebound, this is the first area you'd start to look. One. And if it is sort of working from an Elliott standpoint, which I'm not too fond of getting too strict on, you actually should have found support somewhere in this region, right around 105. But this would be sort of the last-ditch effort. You'd want to see support if we're going to make a new high. So watch how we open the U.S. trade session. I still gauge this as a risk to the downside sub 105.40. Continued downside move, you're looking for 104.60. And just ahead of that 618, I'd be watching that 50 line, that 104.50. Does that make sense? One? He says, great, thanks, Aaron. More than welcome. More than welcome. Interesting pair. Let me take a step back. So there's times, guys, where we want to recognize opportunities, and then there's times where we want to recognize actual trade setups. This was something where you're opening the week obviously at a major resistance level. To actually effectively get a trade setup out of it, we have to have the proper risk management. And right now, while I don't want to necessarily rule out a short position, I don't want to get it here. If we get a bounce back up into 105.18, definitely I'll be looking for a near-term resistance level here. Possible re-entry, stops against the highs here, or stops against that key 105.40 barrier. But ultimately, this is the level you need to break to validate a little bit more of a significant downside reversal here in Aussie Key. Good eye though, Juan. I do like this pair for sure. Okay, that is Aussie Key, number 5 on the session here. Sticking with the Aussie crosses, my favorite pair, or my favorite currency rather, so I got no problems with any Aussie cross you guys want to cover. Euro Aus, I think this was for you too, Juan. Euro Aus looks like this, another trade that we have been following for some time. So, Theo, you're also looking at Euro Aus, saying, I was looking into longing. There's an interesting way of saying it. Longing Euro Aus. So, look, this is what I want to say to you. Definitely, it's got the hallmarks of near-term exhaustion. From a trading standpoint, I think the levels are super clean. So here's what I'm looking at for Euro Aus. First things first, just the broader picture, the daily chart. This is what we were following all last year. We broke back here in October. Obviously, a major multi-year trendline support. Broke, offered resistance. Messy, massive outside day reversal here on the election here in the United States. But the validation of the break of support came into the December close when we once again held that same trend line as support, now resistance. Okay? Downside break below 143.20, 143, validated the reversal early in the month here, and here we are traveling lower. Momentum is still sub 40. Okay, so you're not really getting very strong conviction at all on momentum beyond it being a downside trend. The only other thing I want to note is that we're holding the low day close from last month, and that comes in at 41.48, I want to say. Yeah, 41.49. Low day close from December. You can see that on a close basis, we've been bobbling off that. So right now, I'm watching 141.48 into 142.12. This region right here, guess what? That's now your weekly opening range too. So very clean defined weekly opening range just above the previous month's low day close. Okay, here's what it looks like on the near-term chart, and here's what the focus is for me. So I don't want to stress this median line formation anymore. I kind of was leaving this because I just wanted to highlight the break that we made again below 43.20 last week was pretty big. Validated the break and the reversal lower. Here's this week's opening range. I mean, it doesn't get much cleaner than this, Theo. These are the same exact levels that we were looking at last week. I do want to figure out where we had the last Euro Aus update. Here it is, on the 8th. Same levels. Okay, so we took out that major key support right here. Bearish invalidation was 44.90. Okay, this is all scratched because obviously we took out that, we took out that low, so that retracement is no longer good. But here's the break: 41.12, 41.35 is now support. Okay, excuse me, 42.12. 41.35 is now support. Near-term resistance is this new 618 extension. Look for this range break right here. This is the level you want to clear since you're looking for the long. This is the level you want to clear to get the validation for the recovery. On a break lower, I'm still looking at this, Theo. That's the 100 off the high, man. Okay, that's 140.75, and that would actually converge right on with the November low. That's here. You see this on the left side of the screen? So that's last year's low, and it's exact 100 off the high, and it's 140.75. So from a trading standpoint, I'd be interested if this breaks in looking for exhaustion low near that, or if this breaks higher by the pullback looking for a recovery. Now, if it breaks higher, don't forget your quickest sort of initial targets would be just a retracement off the high here. So if we do break that, and again, this is going to get messy. I'm just doing it for an example purposes. If we do break this high, first target would be right here, 42.68. I still want to watch this key pivot and so forth. And I do think you do see a rebound and recovery, but until it breaks this weekly opening range, I'd either be looking to buy here near the lows, wait for the breakout, buy the pullback, or if we break lower, entry near that 140.75 level might be the best entry in my opinion. Does that make sense? Juan, what time frame are you looking at there? He's saying falling wedge with some bullish divergence. Is that possible? Sure. No, you're definitely getting... Well, let me take a step back here. As far as your bullish divergence, there's no bullish divergence here. Remember Juan. It's very... or who's that? I'm sorry, Theo? No, Juan. Remember Juan. There is no divergence, man, unless you're seeing it on the closed basis. So if I bring this into a line chart, we did not make a lower low. Price action made a higher low, and so did the oscillator. The only divergence that you saw was right here when price action made the lower low and the oscillator made a higher low. But this could be the magnitude of it. That's it. You know what I mean? I'm not going to continue to favor a long side divergence signal because of these two lows that we made last week. We've already rejected that near-term resistance and pulled off. So it's very important when you're looking to ascertain divergence, we're only looking at the candle close. The wicks don't mean anything. Okay? Quick note there. Juan says, wow, thanks, never used the line. Yeah, it's very important, Juan. And that's a very big misconception. When people are looking at divergence, they're looking at the wicks. The wicks don't mean anything. Remember, every oscillator, whether it's MACD, stochastics, RSI, the line actually only gets pegged once the candle closes. So if this whipsaws to the upside, whipsaws to the downside, this can look like this, it could look like this, doesn't mean anything until the candle closes. And that's the close that we're using to ascertain divergence. So long story short, look for a break of the 141.35, 142.25 range for near-term guidance here on Euro-Aus with the risk for a rebound while above 140.75. That's going to be the key support here for this pair. Hey, you're more than welcome, Juan. Cheers, mate. Aussie Key going once. Euro-Aus, rather, excuse me. Going once, going twice. That's number 6. Euro-Swiss, I'm gonna shelf that for now on. If we have time, I'll come back to it because I do want to just go over some of these commodities that we've been following for some time. So first things first, I do want to talk about gold, which tagged a critical, absolutely paramount area of resistance here. No one in the room should be surprised to talk about this level or should be surprised to see the reaction that we're seeing because this is the region we've been talking about for months. 12.18, 12.19, major resistance. And in my mind, the area of which gold, let me take a step back. It's make or break here. If this breaks higher, it's 12.50. I happen to think that you look for a correction lower. That would happen to suggest or would happen to coincide with a rebound in the greenback. So I'm looking for resistance. The rally's at risk in my mind while below 12.19. I don't care that it's a 38.2 per se. That's not why. More so where we are on account of structure. Here's the ascending median line formation that we were working with all of last year. This is off the 2015 lows. The lower parallel, break, resistance, resistance. Operative descending slope off the highs, boom, boom, boom. That median line, resistance. 38.2 retracement of the entire decline off last year's high, resistance. Okay, look to the left there. Some major swing highs in price, resistance. Any way you slice it, okay? Big region. Again, watch momentum. If momentum is able to close above the 70 threshold here, as we did back here in July of last year, you could still have one more blow-off high. But it's important to recognize where you are in price, and by my measures here, we're actually coming into a pretty big area of resistance. The first area of resistance that we talked about for so long was 1200 to 1203. We spent 3 days trying to clear that level on a closed basis with inability to do so. Today's the first move, finally clearing it to the upside. Rallies at risk, sub 1219. Here's what it looks like on the intraday. On a 4-hourly chart, would that be bearish divergence? Am I getting this right, says Juan. On a 4-hour chart for gold, Juan? Yes. So this is divergence, but the one caveat here, Juan, and there's a lot of, by the way, I would encourage you to go through SB. There is on the education page or the resources page, there is, I think, a piece on RSI here as well. So go through sort of the scalping area here, and we go over the RSI a little bit. But one thing I want to note is this, very important, Juan, these signals for divergence, the signals that are above 70, meaning both reference points are both above 70 or below 30, excuse me, tend to be the weakest. The strongest signals in RSI happen when both reference points are closest to 50. So the closer these are, the higher high or the lower high or whatever you're looking at, the closer they are to 50, the stronger the level, the stronger the signal. So whenever you have divergence above 70 here, it's something to keep an eye on. It's something to be mindful of. But that's going to be, in my mind, designated a weak signal. Okay, so if I'm trading X, this might be worth taking half X as my trade size, just because the signal isn't that strong. Juan, does that make sense? Good eye, though. Yeah, that's definitely considered bearish divergence near term, but not the strongest signal here, as we're still well above 70. So there's that 38.2. Again, I think you're at risk for a little bit of move lower. I don't want to necessarily stress this slope, although if you take that slope, it's actually been offering some pretty good guidance still. Okay, so I'm just going to leave it here for now and highlight near-term support at the weekly open, which comes in along the median line. And that's right here at basically 1196. And once we clear this, okay, once we do clear a near-term reversal and break back lower, that's when you want to take on a basic retracement of the advance for the near-term charts, and we'll use that to gauge what we want to be looking for as far as intraday targets. Hey, that 236 comes in right there too. Beautiful. And on an intraday basis, I do want to just leave that 1203 target there. Risk is lower while below 1218. All right. Any questions on gold? I suspect this will be a big market mover this week, or I don't want to say big market mover. It will be catching market headlines this week. Let's say that. And I say that because last week you started seeing all the gold bugs come out, you know. This thing starts to rip, and this is something you want to pay attention to. You know, if you look at this on a weekly chart, this thing starts to rip. As fourth week of consecutive rallies, now all the headlines start coming out saying, oh my goodness, you know, gold is going to go back to 1400, yada, yada. Oversaturation in the market might give us a little bit of a pullback here. Long story short, I do think that the picture stays constructive, but the near-term risk is for a corrective action, sub 1218. Questions on gold? It's number 7. Okay, I'm falling a little behind here, so I'm going to take a little bit upbeat of a pace. I'm going to go into the commodities here for Conwall. He wants to take a look at nat gas. That's number 8. Here's what nat gas looks like. Conwall, I'm not a big fan of nat gas here. I remember last week we were talking about this, and there was a beautiful play. The one thing I just want to note is that you're coming off a big resistance level, and what I like is that we're making an outside day reversal off that level. Other than that, you know, I don't really trade this on a day-to-day basis, but I would say I'm looking for a move back towards 311. Now, 311 is not a random level. That is a 50% retracement of the advance, but more so importantly, you have this swing high okay, from back here in May of 2015. You have the swing high from back here in September of 2016. And you have slope as well as the 100-day moving average just lower. So I'm looking like 311, 305 as sort of an area of which would be key support. And if we break, would certainly mark a much bigger spill. This is pretty big in my mind just on account of the 618 extension. This is an extension all the way off the lows. This is a 50% retracement from the decline off the highs of 2014. You had some really strong divergence. So Juan, we're talking some divergence reminder session here today. This is a good example of strong divergence, right? Price action on a closed basis makes a much more concerted higher high. The oscillator makes a lower high, one reference point below 70, one reference point slightly above 70. That's going to be a pretty strong exhaustion high. And that's the result. So I am still looking lower, below, I want to call it 346, 354. But on the intraday chart, this is my problem. I don't really have too much clarity as far as structure. You know what I mean? I would have wanted to see this. Oh, I'm sorry. I just had the wrong line. That 50 line. It's actually pretty beautiful. Okay, just to remind you guys what we were looking at that last week, this is the broader ML formation we were working with. And we noted again that the lows actually end up being pretty decent on those two touches there with that slope. But we put this one as well, this near-term formation, and I had the divider wrong here, the bisector. The 50 line actually literally caught that high, almost to the pip. So this is the focus range right now. If you make a move sub 333, I would be looking lower. And this is actually a break of your weekly opening range. So you are at risk near term. I don't have a very strong conviction on this one, Conwall. This is what I would say. The range right now, 333 into 346 is what I'd focus as key range right now. He's asking for what's the key range. That's the range I would look for. While noting, if we get another high, 355 is the 618. It could be an exhaustion stretch. And the only reason I think you could get an exhaustion stretch is because what we're doing in broader commodities. If we get one more push higher on some divergence, might be a decent entry, but I do think you're at risk sub 355, and I would be looking lower. I would be looking lower. Look for that break sub 333 to really get this thing going. I think if you clear that, this region here, you start to see this thing fall apart a little bit more abruptly. The one other thing I would note as a caveat here, Conwall, is that this, to me, also constitutes, it really is important where we close today, but it constitutes a break of the weekly open, which is that dotted line you see there in gray, and the weekly opening range. Here's the weekly opening range low. We broke below it. You want to see price action sort of sit below 338 here to validate that break too. So a couple things to take note of in today's close while noting a broader downside bias sub 345 near term. Make sense? Feel free to take a snapshot of that chart, Conwall, here for nat gas if you need it. Here's the 2 hour. And here's the 4 hour. By the way, I see a couple of new names here. Guys, if you, Rich or anyone else in the room, if you have any questions, or excuse me, if you want to take a snapshot of any of the charts that you see presented here, there's a camera button in the top right-hand corner of your GoToWebinar screen. Just go ahead and click on that, and it'll save a snapshot of any of the charts that you see presented. Okay, that was nat gas. Crude, number 9. Here's what crude's looking like to open up the week. So that slope that we were working with last week looks like it's given out, and it shifts the focus right back to the monthly open, which is that 53.80 level that we were talking about last week. That was also last week's bearish invalidation level. That's still what I'm working with as bearish invalidation. So to put things in perspective, Conwell, I know we've been talking about this below 333, target 311. So the first target, I'm sorry guys, take it back. Just let me answer this question here for Conwell. So I don't want to chop it up too much, okay? I don't want to chop it up too much, but below 333, depending on where we are in time, Conwell, is why I caveat this. If it's something that happens within the next 48 hours, I'd be looking at 328 first, which is the median line, and at 50. If that gives out, remember the monthly and 618, 323, 322, that would be just a soft target. But yeah, I'd be looking for a drop into 311, 312 is critical, absolutely critical. It's the daily chart level that we talked about. Yep. But watch those two soft targets if we do break on the near term, 328 and 323 on the downside. Okay. But to take it back to crude prices, hey, you're more than welcome. Take it back to crude prices. Look, I still think the risk is to the downside below 54.21, 54.29. Nothing has changed. Near-term bearish invalidation or areas of interest for entry on the short side is still going to be at the monthly open. I don't have anything near-term slope to work with on this just yet. Now that we've invalidated this, if we pull back below on the close here, it might still be in play, but as it stands, it's starting to get a little messy as far as the pivots are concerned. So going to refrain from taking any type of strict bias on this Conwell, except by looking at that daily chart and still continuing to suggest the risk remains to the downside. Don't forget the the weekly charts on crude. Here's what we've been following since, I can't even tell you how many months we've been looking at this chart. 54.70, 55, where we tapped out right at the close and start of this year is absolutely paramount. And it's the upper bounds of structural resistance. It's Fibonacci resistance, an extension off the low. It's loaded. So even if we bobble here and go sideways for a couple more weeks, that's still going to be the level of which you need to beat to get any type of continuation for the resumption trade. Otherwise, I still think the long side is at risk sub 55. Okay, trying to play crude on the intraday, it turns out to be really decent when you get these formations and these drops. But near term, again, if I bring this into a 4-hour chart, it's starting to get messy. And that could be capitulation here near the highs. It could be some back and forth. I don't know. All I know is that that trend line didn't give you much play, right? Sort of a fake out. This median line now is starting to lose its luster. So, I'm looking to fade stretches into resistance. That's all I can say here on crude. Caught is high sideline. Yeah, and I don't blame it. I'm not surprised to see that actually. Not surprised to see that actually. A lot of people got caught off guard with this crude rally. Hopefully you guys weren't, because we've been looking at this same weekly chart for a couple months, but it's at a big region. It's definitely at a big region. This is huge. I do want to take a segue and talk about dollar CAD. We talked about gold, did we? Yes, we talked about gold. That was number 7. Number 8. Number 9 was crude. Dollar CAD looks like this. We'll do a quick run through the dollar crosses, and then we will wrap it up. We are over on time here. Here's what dollar CAD looks like first on the daily, guys. Look, we're still at support. Not a damn thing has changed. 130 is still the level to sort of beat here on the exact print as far as the intraday chart is concerned. 130.15 is the bottom of that range. So I'll bring your attention to a couple of different things. First, the daily chart. This was the break. It was so meaningful and so critical. like dollar yen last week, again, using the closes to your advantage, we closed just above structural support here on the 11th. On the 12th, finally closed below. That was the onset of the major decline. Rebounded back into former trendline support, now resistance, rejected. Outside day reversal off of resistance, now back at support. Now keep in mind you have the lows for October here, which come out at 130.06. But just ahead of that, obviously the lower parallel and this basic trendline support off the lows from June of last year. So you're coming in some pretty big regions, a little bit ahead of schedule, but some pretty big regions of support. Here's the problem with the intraday chart. Oh, and by the way, I'm going to keep hammering this home to you. Or this one's for Juan. Says Juan, yes, thanks. Learning a lot here. Cheers, Juan. This is divergence yet again on a closed basis. Price action making a lower low. The oscillator making a slightly higher low. You see that? So it's starting to be waning divergence. Not something very compelling, but it's starting to get there. So here's the intraday chart looks like. Long story short. This is your new level of resistance. Okay, and there's a lot going on. I know this might look messy for you guys at home, but just keep your eye on this. Pitchfork is the pitchfork we were talking about in the daily chart. These red lines are just some slope lines extending off the highs here. The parallels have been pretty fruitful, and there is a parallel right now that converges on that same key region into 131.55. So that's still what I'm looking at as resistance. Obviously, that parallel confluence came higher up last night in overnight trade near 31.75, where we capped out. But right now, I dropped that to 31.55, and that completes a 236 basic retracement too. So key ranges of resistance, 31.55 for me would be near-term bearish invalidation. Key support, 130.15 into 130.24. We're testing that now. A break below 129.58, and this thing could collapse. That would basically be a break of this region right here. Okay, in such a scenario, again, the daily chart, I have to work some new targets. On the intraday, you'd be looking for 28.80 and 28.30, but there's certainly a lot of risk if we break below that. My personal expectation, near term, I think you get a rebound off this level. You look for some resistance or a reaction off 31.55, but the break sub 30 really could get this thing going to the downside with a little more fervor, let's call it. Okay, watch relative price action in the dollar and crude for this one. And if the dollar starts to hold support, as we talked about earlier, the index rebounding off that near-term support, if that dollar does hold, look for that rebound to play. If we push through 100 spot 37 into U.S. trade, I wouldn't fight it, guys. I would not fight it. We're just getting full, market participation coming back now. Let's not get too overly excited. That is the DXY and dollar CAD. Here's Euro real quick. I'm only going to highlight one thing. Structural resistance comes in just higher at this median line right here at the daily chart. A little bit higher from where we are right now. The 100% extension from the advance off the lows takes you into 100 spot or 1.0740, let's call it. So 107.40 would be sort of initial area. I'd look for some resistance. There's some nice slope there as well. Let me bring this to the 50 line. I don't know why it's at 618 right now. There we go. A little bit better. Okay. An area of resistance I'd start to look for a little bit more of a stringent resistance here on the euro-dollar rally. Again, suggesting you could see a little bit more weakness in the dollar before mounting a little bit more of a recovery. Look for that 107.41 level. That is the euro. British pound, here's what the sterling looks like. Big old move here off of support. 88.6 retracement, no big deal. But remember this last week, guys? We talked about that median line. We tagged it for a perfect tag on the 11th. Here's another. We ran through it a little bit on the open here, but we gapped lower. So initially you're looking for that gap fill. Once you break, that gap fill typically marks a decent reversal trade. So look for some resistance near term at 124.06 into 124.33. Here's the upper parallel, 50% retracement. Let's drop that down a little bit. Sorry about that. We're there right now. We are there right now. Not necessarily that I want to go short here, but certainly if you're holding long exposure, keep this level in mind. And the only thing I do want to say is if we break higher, look for this parallel here, extending off that high. It's 2016 low day close. That's this level. So this is still going to be bearish invalidation for the near term, 24.33. If we break that, you're looking higher. Initial target at that 100-day moving average, which converges on that median line near 125.58. Questions on sterling? Another example of divergence, price action making a series of lower lows on the close. Oscillator making a series of higher lows. That's bullish divergence. I'd be looking for exhaustion here heading into the U.S. Open. A little bit of a pullback might get you an opportunity. Okay, so we did dollar CAD. We did sterling. We did Aussie. Kiwi real quick. I do think that Kiwi is looking very interesting here. I don't necessarily have a play on it yet. Look, I'm looking for exhaustion, but I think if you stretch into 72.50, 72.40, this is where I'd start to look for a little bit more of a stringent key exhaustion play. The only thing is if this is actual breakout, I do think the risk near term still remains higher. So I don't want to necessarily fight a Kiwi rally at this point, guys, which is why I think Aussie Kiwi to the downside might be the way to go. But keep in mind, in my mind, again, if we close today specifically above 71.70, I'm looking for that stretch near 72.50, 72.40. The bottom of that range is 72.42 as sort of an initial area for a little bit more of a stringent resistance level here in Kiwi. Okay. Sir, copper, please. I forgot copper. Here's what copper looks like real quick, and we're going to end it up. I'm way over on time, Conwall, so feel free to take a snapshot of this chart once it loads, if it ever does. Okay, little issue here. Let's try to restart this and see if we can get a copper chart to update. All right, we're going to have to cover this one tomorrow, Conwall. I'll see if I can tweet a chart for you on SB Squawk if it does load, but I can't hold this out any longer. So let me run from here. Guys, I will see you all tomorrow. Eileen says, thanks for the class. I'll be missing a lot of the upcoming live webinars over the next weeks, but putting together a new business. We'll catch the recordings as I can. Eileen, best of luck with that. Keep me informed and keep in touch if you have any questions or something I can address for you in the webinars when you're not here. I'll be more than happy to do that. Guys, best of luck trading. Again, we'll be on tomorrow morning, same time, same place. Same thing with the midweek strategy webinar with Jamie. Will be on tap tomorrow as well. Keep in mind, tomorrow morning we get the BOC numbers, or the BOC interest rate decision. So that's followed closely by the US CPI numbers. We'll cover those live here in the webinar. See you then. Cheers.